Hi traders, welcome to Elite Currency. My name is Chris. Today's focus again on the euro dollar, pound dollar at the beginning of December. Let's kick off with the euro dollar. Basically on Thursday we were saying look out, this price might retrace upwards, right? The price was falling actually here and making a neat downtrend channel. But indeed the bullish break happened and price stopped at the fibs as we indicated as well that these could become resistance fibs. So the price is following the path of least resistance as we expected. Remember, we were saying 1, 2, 3, 4, 5, then ABC completed 5 waves here and expected a wave B. So A and B completed. Now the question, the next phase is, will we get a wave C? That is the question mark. Of course, we're never sure. So far, price has acted as expected according to these wave patterns, but there's no guarantee that this will be a wave C. It all depends. From my point of view, the confirmation is the break below this trend line. And in that case, I would expect price to fall basically to the minus 61.8 fib, to be honest, at around 117.25. Of course, 117, 117.50 in general is a support level to reckon with. Let me get rid of this fib quickly. That is not so needed right now. Let's go back to this 4-hour chart. So another fib that we can use is this fib from here to here. And you can see why that zone, besides the fib target, is also useful, right? We have a 61.8 support fib and a 50 support fib. So as I said, between 117, 117.25, 117.50, those are layers of support where price could bounce and react to in this zone. There could be bullish candlestick patterns on a time frame like this 4-hour chart, and there could be a bullish bounce and continuation of this uptrend. So that's what I'm expecting. Now, before price might get there, it could take a while. Price could go build a triangle here, stay kind of in between maybe this support line, but also in between the new resistance line. Let me add that like this. And it could, Monday could easily stay in between these two lines. If we do get the bearish break, that's the confirmation of my view, the ABC zigzag pattern. If price does break to the upside, which is what I don't expect, but if it does, then it would have to break above this top for my ABC zigzag to become invalidated. So in that case, it is not this particular impulsive bearish correction. And if some of these terms are unfamiliar to you, check out our YouTube channel or check out more free material from us on elitecurrency.com. So this is the big question. If it does break to the upside, I do think that there's still hefty resistance at 120, 120.50, 120.75. There could be a small intraday breakout there on lower time frames to catch that extension, but all in all, it's still a heavy layer of resistance, and I would not want to take any big long-term trades there because it's most likely going to react still to that level or in some way, either by reversing or by going sideways, in my view at least. So for the moment, price is showing some bullish reaction that could have been due to the news that came from the US about some political news. So to keep it short, so basically you can see that that did create a bullish candle. But in my view, still the most important is the break above or below support and resistance. All right, let's take a look at higher time frames. Let's get rid of this trend line now. Moving averages are aligned. So if price does make this dip as expected, I think that there could be support found at this fractal, at this support. There could be an inverted head and shoulders there, right at this line, for instance. If it were to go that deep, it would be another support level to think about, actually. And otherwise, it's showing higher highs and higher lows. So I think we are showing the first sign of some uptrend, but you never know. This, of course, could be an ABC, an extended wave pattern like this. So if there's a lot of bearish momentum in this fall, and then a bear flag, we have to be careful. It could be an extended correction too. For the moment though, bullish weekly candles, bullish monthly candle. So from this perspective, a bit of a retracement of last month's November's bullish candle and continuation seems most likely at this moment. So I am bullish, just waiting for a correction first. I'm not saying it's a guarantee that the price will continue as I expect higher after it makes this correction. But for me, that is the most likely at this point. All right. So, and if it does continue right away, as I said, that does not look as interesting. So that is probably the most important details with regard to the Sunday open, I should say. It depends a little bit on how price evolves here. I think if there's a triangle, it really depends on those trend line breaks. So if we do get a break, for instance, to the downside, and you see a bear flag, that's what could also be very interesting, is a break of this bear flag, for instance. That's what I'll keep an eye on. All right, pound dollar. Let's move on. Let's take a look at some of these candles. Maybe I will renew this quickly. All right, there we go. So November was bullish, and the weekly candles are bullish, riding above this moving average, as you can see, approaching the long-term moving average. And on the daily chart, we had that break, pull back, continue. We had a false break first here, but price then eventually found support halfway that zone, and up it went. So strong bullish bounce, and bullish bounce is not only a break of this trend line, but also a bounce of basically this support trend line. So I am bullish, excuse me, on the pound dollar too, just like the euro dollar. Looking for a little bit of retracement, I think, of this week's weekly candle. So putting a fib on that weekly candle, I don't think is anything wrong with that. Looking for 38.50, 61.8 fib retracement. If it goes to the 61.8, it will be extra neat because of the broken resistance there. But any of these fibs could really stop it. Let's take a look at the 4-hour chart now. You can see a little bit of retracement going on at this moment. So I wouldn't be surprised if Monday maybe tries to see an attempt to break, but then fails, and we see an extended correction, and then goes back into support zone, which I believe will be a bouncing spot. So that's what I'll be looking for, is bullish price action candlestick patterns at the 50, 61.8 fib. If price makes a triangle or makes a bull flag, in that case, the 38.2 fib could be the turning spot. But I need to see extended bull flag pattern like this, or a triangle pattern like this, for instance. We could see maybe like this: fall, bounce, fall, bounce, fall. In that case, we'll be looking to trade it in here at the end of the wave E for an upside, or if it makes a bull flag, then looking for a bounce at the 38.2 fib. If it's not that slow and the pattern doesn't last that long, then I'm still looking for price to go deeper. The target, well, looking with this fib, basically aiming for the minus 272 target. For the moment, 136.38. There's a top here just above it too. So that makes sense from a target point of view. All right, so that's it for the pound dollar, I think. Check out more free material, analysis, and indicators, etc. on elitecurrency.com. Wish you all good trading. Talk to you soon. Cheers.